Hey guys, welcome back to the channel. Welcome back to another video. Today's the day. Fed Chairman Powell yesterday announced the 0.75 interest rate hike yesterday. And as usual, as predicted, the market is falling. Right now, us as investors, this is a good time. No matter, regardless of what anybody tells you, right? There'll be times where people, man, my marker, I'm sorry. There'll be times where people are saying, oh man, hold on to your money, save your money and all this other stuff. Don't put your money in the market. The market's crashing. This is the time you do it. Regardless of what the talking heads are telling you, regardless of what anybody's telling you, because most of you that are telling you stuff ain't never invested. Fear and greed are the two things that control the market. And right now is a time to be greedy while everybody else is fearful. That's not my quote, that's Warren Buffett's, but it's true, the fact. And this is what he's talking about. When that market is red, the opportunities are there. What are we going into? What are we going to invest into? I have a portfolio. Well, I have multiple portfolios. Some of you guys do out there. Some of you guys are just starting your portfolio, and you don't know where to begin. In this video, I want to talk a little bit about, where you can put your money, where you should be thinking about putting your money, especially if you don't want to watch the market and all that, and you're not an expert. It's so easy, anybody can do it. And then once you make these picks, this is what you do afterwards. So without further ado, let's jump into it. Check it out. Look, first thing I said, as earlier stated, buy something now. Federal Chairman Powell yesterday said, he admitted from his own mouth, okay, we're in a recession. And he said, they asked him what the timeline is going to be. The man said, we'll look back 2 years from now and see what the progress is, So they already letting you know this thing's going to go on for at least 2 years. I didn't think it was to get the economy back, but that shows you how serious this situation is. During these next 2 years, you're going to see a lot of influx in the market. You're going to see a lot of green days, and then they're going to turn red. You're going to see a lot of good days where you think it's over with, and then you're going to see a rash of red days, majority of rash of red days starting today, right? You're going to see a lot of bad earnings reports. A lot of good companies are going to come out with bad earning reports, and don't pay no mind to it because there's a supply chain issue. It's not enough products for the demand, and that's part of the reason why we're in this mess anyway. So that's obvious. Unless it's something crazy, like some type of scandal, something with the business, then you don't consider buying it. Because the bottom line is this. If I tell you, this is what I liken it to. If I tell you, I give you a sheet of 500 companies on it, all of them good, McDonald's, anything you want to name. And they say, you can pick 10 of these companies and I'll give you stock in every one of these companies. All you got to do is sit on your hands and have an early retirement. You can never touch the stocks. They're worth this much. You touch them, that's your investment. And for the rest of your life, you'll be straight. All you got to do is, I'll give you the stocks and you don't touch them. What companies would you pick? You would pick reliable companies, right? Ones that you don't have to watch and ones that are in the stitched into the the very fabric of where you live, and they're proven in the times of, having you comfortable, right? Now, I think I messed that up the way I said it, but we're gonna go into it. What I mean by these companies. You want to invest your money in the blue chip stocks. I don't know what country you guys are in, listen to me. So I don't know what blue chip stocks are in your nation, or if you are available, even available to invest in American stocks. If you're listening abroad, I appreciate it. Blue chip companies. Some of them, your Dow 30. Dow 30, the top 30 companies in America. S&P 500 companies. These are the companies you want to deal with. A lot of these companies are selling at a discount. Some of them, they say, are overvalued. You don't really watch those statistics on some of these networks because they're going to be overvalued because they're going to start falling. So whether it has an overvalued tag or not, you want to look at it as Is it a long-term play for me? Because the way I invest is I get a stock, I hold it possibly forever, and I get stocks that pay dividends, and I get stocks that pay me every time they dish out the shareholders, which would be myself and you guys too that are investing, and you get a profit, a percent of the profit of the money that you put into the business. Thus, you get is equivalent to your ownership stake, right? Now, blue chip companies. These are companies you don't have to watch at all. You can invest in them, periodically look at it, and over time, because the company's proven and they're constantly coming out with new things and maintaining what they're doing, the quality that they're doing, all you got to do is sit back and collect, because everybody wants to go to an early retirement. I invest to retire early. I want to have 10 more years in the workforce, and then I'm calling it quits. You want to have another thing is you want to deal with something else you want to invest in, quality ETFs. Like Vanguard. Vanguard has awesome quality ETFs. You can go to the website, or you can look at other YouTube videos where people do videos on Vanguard. Vanguard is the leader in ETFs, and they're worth taking a look at. I personally have Vanguard ETFs. I love them to death. Low expense ratios, and they're actively managed, and they have good companies in them. Can't go wrong with Vanguard. Like I said, companies that are too big to fail. You always want to deal with a company that has been established. It's been around for a long time. Your Coca-Colas, 3Ms, Johnson & Johnson, companies like this, bona fide winners, big boys. They big boy stocks. You want to invest in something like that? Put your money in, sit back, breathe easy. PepsiCo, all of these companies. Now, this is the part that's key. Now, my ideas of where I want my portfolio to go will be different than yours. So, me as a YouTuber and other YouTubers will only speak to you from the excitement that they see in the future of stocks that they like. So, as far as taking anybody's advice, you're not really supposed to take anybody's advice. Now, I'm giving you guys information that you can go and research yourself, and I'm not calling anybody out or anything like that. I would never do that. But I'm just telling you, early in my investment journey, and I was learning about stocks, I used to listen to a lot of YouTubers, right? Some of them ain't even around no more. I used to listen to a lot of YouTubers. And they were around my age, and I'm like, wow, they're older, so he knows he talking about this. And then once I started to understand, I'm like, okay, this guy is doing this just for, entertainment. But a lot of people don't know the difference, especially when you're speaking with emotion. It's not my job to come on here and be like, yeah, buy this, buy that, buy that. It's my job to come on here and just make sure you get something out of it. And if you get entertained in it, yeah. But I'm more of like a teacher or somebody that, I'm not just talking to be talking, And like I said, put your money in companies and you understand something you can explain to somebody else right off the top of your head. If you invest in McDonald's, you can talk about McDonald's. Hey, why you like McDonald's? You don't want to say, oh, I like the Big Mac, so I brought the company. Like, what? Like, you know what I mean? But anyway, now's the time, guys. Now is the time. I mean, you got to be feeling good. If you already have your portfolio and you've already been investing and you coming into this in the beginning, you got to be feeling good, because we know what those red numbers mean. We see what them negatives are when them stocks are down, and we like, okay, now I can build more positions. And like, you investors that are already out there, load up, man. It's like Black Friday in Walmart. You know what I mean? You see the stock, put your hand on it. When you put your hand on it, claim it. Go get it. And the thing that's crazy, well, not crazy, but the thing that's good about this, a time like this, all these stocks falling, if you're a new investor, dollar cost average, which is basically every month you spill a little bit of money into the market, and as you see these stocks going down, you buy them, and then the stock position you have, you keep adding money into them and buying shares at a time, small shares at a time. I built my portfolio buying 1 or 2 shares or something. Sometimes 5 or 6 if I was lucky and I had the money. But I didn't break my back, but I stayed steady. And next thing you know, 5, 7 years of doing that, you know, you got something serious. And with the way this is going, 3 to 5 years, you're going to see something coming back because stuff like this don't happen all the time. COVID went down, a lot of people made money. They stayed in the market, kept dollar cost averaging, no matter what the media said and the fear that they tried to impose on everybody and the hysteria that spread out. People stayed steadfast. Same with this. You got to stay steadfast. This will work out for you. It's going to work out for me. I have no worries like everybody else. Like I said, a lot of times on TV, you'll hear the talking heads. People on these financial channels. Are they bad people? No. But you got to understand something. They're on a television show. They're reading from a teleprompter. And on the teleprompter, they have to relate to you. A lot of people say, oh, this is a sell or this is a buy, and they don't even own the stock. Sometimes they'll tell you to sell the stock, but in their personal portfolio, they don't sell the stock. So you got to take everything on face value. Like me, anything I say, go and research it. You don't have to don't take my advice. I'm not no stock guru or somebody that went to Harvard Financial School or something like that. But the thing is this, what they know, anybody can know, and you can learn with just a little bit of research. If you're hungry, you'll eat. That's a term. If you're hungry, you will eat. And when I say eat, that means you will go out there and find the right necessary sustenance for your mind to be successful when you're tired of being in the rut that you're in. So blue chip companies, Dow 30, S&P 500 stocks, right? There are a lot of stocks that are going to be dropping. Well, I mean, they all drop now, but it's going to be a lot of stocks that are dropping. Another thing, like me, I'm happy about it because Tesla falling today. Tesla do crazy numbers no matter what's going on in the market. So I'm just sitting and waiting. Will I buy some stocks today? I don't know. I'll probably buy around 2 o'clock if I do. But guys, I just want to chime in here and tell you guys, listen, this is the time. Don't BS with this. Even though the man said it might take 2 years, you never know what the market or the economy is going to do. We might look up and the CPI numbers just drop all of a sudden. Everybody like, oh man. And then he come and make an announcement. Oh, we're not going to do any more Fed hikes, or, we might take the hikes down or whatever it is they do. And then the market take off and you done missed it. You don't want to be in that position. The best trading days is when we usually had that turnaround and they had that spike. And a lot of people are not in it. I don't want that for you guys. I've witnessed it. I looked at my portfolio and then went back a couple months later, like, damn, I made that much money. When did this happen? And you have to go back and look at the charts and all of that stuff. And I'm like, man, I'm glad I had my money in there. And that's a good feeling. That's a feeling everybody should experience. If you say you want to invest, invest. Don't jump into something and then say, you know what? I'm going to jump out. And have that indecisiveness. Decide what you want and attack it. Attack it. Companies you understand, companies that are well ran, right? Quality ETFs. Like you could take an ETF like S&P 500, ticker symbol VOO. You could make that the core, 50% of your portfolio, and then after that, you can pick and choose the stocks you want. But you have that S&P 500 Vanguard ETF sitting up there, ticker symbol VOO, like I do, and it controls a lot of your drop. So it's one of those things, man, that you can really, really benefit from this. All it takes is a little bit of planning, being steadfast, buy these stocks, know why you buy them, feel good about when you bought them, and then take these hands that you push the buy button with and sit on them. Don't even look at it no more. And then as these stocks keep falling, you dollar cost averaging, you keep buying. Because say you're falling, whatever you buy, while it's still red, is going to mitigate the loss that you had over top of it. So it's going to cushion your losses. So say, I'll give you a perfect example. Say you had you bought something for one stock for $100, right? We're gonna go one share. The stock then dropped it dropped $25. So it dropped 25%. So now the stock is at 75 in 1 month. So now you're down $25, right? But if you dollar cost average and the stock goes from 75 to like 80, you didn't gain 5% off your loss. That's why dollar cost averaging is very, very effective and it's needed. You know, guys, it's not rocket science. It's not rocket science. It's one of them things where it just takes patience. You just persevere. Don't let the emotions in the market affect you. Don't let what people say on TV fool you. Because remember, they have to make a TV show or the news entertaining. Watch what's going on in the world, and you'll be able to figure it out. You know, especially when it's dealing with should you or should you not invest in the company. There are many answers to this test, you know, and a lot of the answers are right. 90% of them are right. It all depends on how you perceive the question and how you solve the problem. You know, with that, I'm out. I appreciate you spending time with me. I know this was a long video, but I had a lot on my mind. I'm sorry I stumbled over my words. It's the morning time. I haven't had my breakfast. So I appreciate you spending the time with me. Remember everything we talked about today. Now's the time. Don't BS. Make your move. And I'll see you guys in the next video. As always, like, share, comment, and subscribe.